Oh my God, what is happening? Oh my God, what is happening? The stock market has been going up. Is this a dead cat bounce? There are so many bad news over here, and look at the national debt. It's gonna be the main trigger for the entire economic meltdown. So is it gonna happen? Let me share with you my views on what do I think, right, will be happening to the stock market with all this debt and all this economical bad news. Okay, stay tuned. Hello, welcome to my Jason Stronger Head review and analysis on the stock market. The stock market has now crashed for the 9th week, and it has really experiencing a recovery back to more than 50% from its bottom. So is this a dead cat bounce? What it is? The previous video, few videos in fact, I've been talking about whether is it possible for the stock market to be experiencing bad news and still going up, and it looks like it is still going up. Definitely look like a V shape to me, correct or not? Okay, so is this a dead cat bounce? What is happening? More bad news is coming up. So let me share with you my take on the overall economical bad news and the stock market. I'm not a very smart person. I'm just sharing with you my opinion. So if you don't like my opinion, and if you disagree, I'm okay with it. And you can leave a comment, and you can scold me on my comment. That's fine. I just want to know what are your thoughts. Okay. So think about this. Yeah. Okay. Trillions of dollars has been pumping into the coronavirus spending, and it will definitely explode right to the level where we have never seen before, as far back as the World War II level. Oh my God, this is crazy. Okay, so if you look at this current situation over here, the relief for the outbreak has been pushing the US deficit to a staggering low. Ho, ho, ho. So see, can you see the diagram over here? Oh my God, this is like really, really crazy. Yeah. And we are expecting only a one trillion. You know how much is a trillion? Or you go and draw the number of zero is crazy. Yeah. And right now it's going to be 3.7 trillion. And if you look at the trillion, the deficit will reach historical level, right? It's really, really going to be like, right, like break the roof kind. Okay. And the deficit and surplus, this is definitely a deficit to me. So because of that, would it really experience a meltdown? Okay, this virus projected to trigger the worst economical downturn since 1940. Would it really happen? Yeah, that means, right, at this very level over here, this level is going to be a dead cat bounce if all this is going to be triggered and all this is going to be real. Now, I know a lot of people telling me that, Jason, you're so wrong, man. This economy is not sustainable, and one day it's going to melt down. It's going to crush all the way to almost zero. Is it going to happen? Now, I've heard a lot of bad news. I've heard bad news like more than 10 years already, although I'm not in the market for so long. Okay, so take a look at the market. Okay, I think my picture cover a big part of the picture, but I think you understand what I mean. The market has always been up in the last 100 years if you look at the big picture view. Now, this market is up not without a lot of bad news, you know. Let me share with you all the bad news about debt. Yeah, today we're going to talk about debt. So I don't have the historical record of stock market, but you know the market has always been up. Now, this particular newspaper, the Daily Southern Cross from New Zealand, it says that the colony is greatly over indebted. I have no chart to prove, but you know the market did okay. And also, according to Times, 12 March, there's a typo over here, 1972, they said that the US is going to go broke because of the debt, right? So the market is going to crash, but I don't think the market crashed. Okay, and over here, according to Times, okay, on 10 Jan 1983, they say there's a debt bomb coming, debt bomb. Yeah, so the market is going to crash. And I think you all know like it didn't crash. Los Angeles Times, 18 February 1988. over-indebted economy. Beware, market gonna crash. Market didn't crash, go up some more. And then over here, Toronto Star, 22nd of November 1991, over-indebted. Boom, the market went up 10 years. Okay, and Business News, 2001, the risk in the boom, over-indebted case again. So I don't think the market crashed. And in 2011, potential economic catastrophe, confronted by over-indebted situation, boom, the market go up again. And now we are having this news again, right? Okay, so according to Wall Street Journal, 24th April 2020, coronavirus projected to trigger the worst economic downturn since 1940. Is it going to happen? Of course, I don't know lah. Okay, but so many news. This is not all. You know, there are a lot more. I just don't have the time to pull everything out, and my diagram don't have enough space for it. Okay, so do you think this is gonna be the meltdown? This is really gonna be the trigger for the entire meltdown? We don't know lah. Huh? Okay, so based on history, I think no lah. Okay, and you look at deficit and surplus, right? So this is surplus. That means the US did not spend so much money, they don't borrow so much, right? This is deficit, right? Okay, if you look at it, okay, my screen blocking this whole thing again. Okay, I think I must really string to show you. So give me a moment. Okay, I must string and show you. Okay, let me show you again. Yeah, so if you look at this diagram, right? When the market is, when the US is in surplus, right? Okay, can you see the average return for the US market is low? When it is in deficit, the US market, the return is a lot higher, like a lot higher. Oh my God. So what does it say? Deficit better or surplus better? The answer is deficit better. Okay, so that means, right, when the government owe a lot of money, the US market will go up, you know. Doesn't make sense, right? Okay, I explain to you why actually it makes sense. When you borrow money, that means, do you want to use it or you don't want to use it? You want to use it, right? So when you borrow money, when the government borrow money and when the government spend it, they will spend it on either government or business or large corporation, right? Okay, so when the government spend, it will go through a few hands. And as the money that the government borrow goes through a few more hands. That means it will spend on other people, then other people spend on other people again, other people spend on other people again. The impact is about 3 to 6 times, right? And because of that, that means, right, the whole economy will be spurring because a lot of people are spending money. And some people tell me, no, actually a lot of people are not spending the money. This money doesn't go to the people. It's not helping the people. And when you print so much money, there's going to be one danger, hyperinflation coming. So if you look at the last history, right, of the country that printed a lot of money, oh my God, the money went worthless. Let's take a look at the US dollar. So US dollar now, oh my God, can you see that danger? Hyperinflation coming. Okay, so the US dollar is getting weaker and weaker and weaker and weaker and weaker. Why? Because they keep printing money. See the chart below. Okay, so because of that, is bad thing gonna happen? Is it really that one day US dollar is gonna be worthless? I don't know. But if it is, what you need to do is you cannot hold cash. Cash will be trash, right? Now that's what it means, right? Okay, so no, because of the printing, right? A lot of people say that hyperinflation is gonna happen. So let's take a look at 2008 until now, when a lot of money been printed, quantitative easing pumped into the market, and what happened? Okay, so inflation rate didn't happen, you know. Yeah, inflation rate has in 2008 until now is only about 19%. It did not overinflate, like the previous chart that wow, they print the money went up to over I don't know how many million percent. Okay, but this one didn't what. However, what went up? So the stock market went up, boom, about 225%. So I think the inflation is in the stock market. And now, right now, the current situation, the US is printing a lot of money now. In fact, even more money in 2008. That means what? You know, my take will be the market will go up a lot more. Yeah, that will be my take. Of course, I may be wrong. I really don't know. So if I'm wrong, I'm wrong lah. But if I'm right, what if I'm right? What do you always think about? Don't be too fixated. You know. Okay. Okay. If I'm wrong, then fine, right? But what if I'm right? That means what? We already missed the bottom, or even if the market is going to go down, look at long term. Long term, the market will go back up and will go back up a lot higher. So that's my take on the market. Of course, if you agree, then hopefully you will give me a thumbs up. If you disagree, you can give me a thumbs down, doesn't matter, and leave a comment, okay? I want to know your views. Yeah, so thank you very much, everyone, and I hope that you have enjoyed the video. If you like the video, I'm gonna do one more right this week. I'm gonna talk something about the US market and what do you think will be the direction in the next few weeks. So, and also oil crisis, I've talked about it before. If you want me to talk about it, please leave a comment and I'll talk about it again, whether it will impact the overall stock market. So leave me a comment and remember to subscribe so that when I release the next video, you'll be the first to receive it. Thank you very much and I'll see you again soon. Signing off.